Good evening, everyone. My name is Kelvin Reed. Welcome to the journey to become wealthy. I know we having some issues with the camera, so you guys don't see me today, but we still gonna get the same good information. We're gonna still go through the same thing, right? So many of you may be wondering what happened in the markets today. It was a red day. Things were kind of rough. However, we plan on bouncing back, right? No big deal. I told you guys we're going through a correction, and now due to news, they're actually talking about a super bubble popping. And this is a guy who's been able to predict the bubble pop for the past three times this happened to the economy. So this is definitely major news, and it may have been a little negative catalyst for the markets or FUD, right? Fear, uncertainty, and doubt. You guys know FUD, fear, uncertainty, and doubt. So let's get into it. You guys be sure to like and subscribe to the channel, and I thank y'all for y'all's support. The Dow is down negative 1.30% on today. S&P 500 down 1.89% today. The Nasdaq down 2.72% today. I mean, the indices are getting beat down, and really, it's nothing we can do about it, right? They're just getting beat down. The Russell 2000 down 1.78% today. Things are rough. I mean, we saw it go all the way up yesterday and then come back down. I do believe they call it a dead cat bounce. That things go up, we look like we're gonna see green days. Look like it's gonna be nice and beautiful. You know, it's just like the sun come out and then all of a sudden it starts raining again, right? So that's pretty much what we saw on yesterday. And today, I mean, there was no sunshine whatsoever. We just pretty much got beat down from the time the market opened to the time the market closed. Let's look at the pre-market movers. We don't see anything. I mean, nothing that I'm aware of that I know about that I like. But pretty much you see the gains were on the smaller side, while the losses were a lot larger. We got Paycom and Leidos down 3.3%, down 2%. So the drops were definitely heavy on today. The Hang Seng, the Hong Kong market was down 0.14%. Again, that's not too bad. That leaves Hong Kong pretty flat, especially seeing the news that was had on yesterday where China markets were actually China is trying to help their economy, right, by decreasing rates. So that's major. Let's get into this news article though, right? Let's check this out, y'all. Y'all read the article. The stock market is a super bubble about to burst. Top hedge fund manager warns. Apparently, this guy here has been able to predict the stock market and the super bubble burst about three times, the past three times. 1929, when the economy popped. I guess the depression, we had a depression or a recession. 2008 and 2000, I believe it was, 3 different years. But we can check it out right here. Let's read this article and see if they give us some details. So stocks are off to a tough start this year. The tech-heavy Nasdaq is already in the correction, a more than 10% drop. And if one of the most influential hedge fund managers to be believed, this could only be the beginning of a very painful time for investors. Jeremy Grantham, co-founder and chief investment strategist of Grantham, Mayo, and Van Uderlo, hopefully I didn't say that wrong, said in a report called "Let the Wild Rumpus Begin" that stocks are now in the midst of a super bubble that it won't end well. Grantham, who has been running the firm's investment since it was started in 1977, was similarly bearish at market tops in 2000 and during the great financial crisis of 2008. So I guess I was right as far as the years, right? So in both of those years, they called it a super bubble, and this guy called it, right? He said the markets will be bearish, and the markets came down, I guess, between 20 and 50%. So you can pretty much bet that what this guy says weighs pretty heavy on the markets, the hedge funds, and all the big dogs and how they feel about investing this year. So that means we should also be very careful, right? I mean, I know I said when others are fearful, we should be greedy. However, we should be smart in what we consume, right? Be smart in what we consume because you are what you eat. So we want to make sure that we're consuming and buying good companies that we believe in, and we're holding through this. So when things come down, we don't worry about it. We watch it go down. We smile because we get discount rates, and we continue to consume as it go back up, right? We wait on that day that things go back up. Good luck, we all need it, said Grantham, whose firm manages about $65 billion in assets. Again, this is one of the big dogs. He noted that U.S. stocks have experienced two such super bubbles before 1929, a market fall that led to the Great Depression, and again in 2000 when the dot-com bubble burst. He also said the U.S. housing market was a super bubble in 2006, and that the 1989 Japanese stock and housing markets were both super bubble. He says here, all 5 of these super bubbles corrected all the way back to trend with much greater and longer pain than average. So that means we could see this thing coming down for, I mean, most of the year, guys. So that's one thing we're gonna be wary of. But again, as long as y'all with me, we're gonna make money whether the stock market is going up or down. We're gonna trade put options or call options depending on the momentum of the market. So we're not gonna be afraid, and we're gonna wait till things at the bottom. We're not gonna get too excited. We're not gonna emotionally trade. If we see our stocks come down, again, if it's a company that we don't believe in, so something that you guys just think you were gonna make some quick money in, after 10%, we have our trailing stop loss to kick us out of that. We don't want to hold anything below 10%. That is for short-term stocks. And for our long-term stocks, really for me, I'm not setting any stop losses on those. However, for some of you who may not be willing to hold through the long term, I would definitely set one for whatever percentage you feel comfortable with, right? Set one for whatever percentage you feel comfortable with losing, because I know you guys don't want to lose money. However, I'm willing to see every company that I have invested in and that I have put into this portfolio go to zero, because I have faith in these companies and I am willing to hold these because, again, you know, this is one thing I read earlier, and I just want to mention this. I know you guys can't see me, so you guys don't understand, but they say this was considered the great transfer of wealth, right? And this goes back to me telling you guys about our parents and how they were able to invest in houses and land for cheap. And then now things are much more expensive for us. So our parents, they had the greatest wealth, right? And then, you know, they eventually supposed to pass it down to us. But now things are coming back down into that territory where we have the opportunity to be that beginning of the generation, right? We can buy these things just as low and just as cheap as they did, and the wealth transfers to us into the future, right? But that only works if you're willing to go through this thing and suffer through it, right? But on to the next thing, right? I just want you guys to be aware of this, so that if you're trading, if you're afraid to lose any money or afraid to just see this thing go down for the next 6 months, I want you to be very aware of what you're getting yourself into. You risk the chance of losing 20 to 50% at any time in any company you invest in. However, we're investing into companies that we believe in, right? We're investing to make money. We are not in this thing to lose any money. We're going to do whatever it takes to continue to be profitable throughout the year. So let's check out the heat map. We got our heat map, and again, you see it's just pretty much blood red, right? Blood red everywhere. Technology sector down, communication services sector down, consumer cyclical sector down, Amazon down 5%, 5.95%. Again, all of these things, as I said before, all of these things are coming down into ranges where it's affordable for us to buy. And they will eventually come back to their greatness, right? They're going to eventually come back to their glory, and this gives us an opportunity to make money. This gives us, it may not be immediate money, you know. It may not be the right now money that many people need, right? We need that immediate gratification. And that's why I'm talking about doing some put options throughout the year, you know, to continue to give us that immediate gratification. But as we continue to invest in good companies over the next year, we should start to see profits, right? We want to see that. We want to see the wealth start to fall in, right? Start to pile in, and hopefully we see the profits that the generations before us saw. Hopefully we make some millionaires. Hopefully we make some billionaires along the way. Consumer defensive, it looks pretty flat, right? It don't look as negative as the rest of the market. However, it looks pretty flat. Got some red in it. Financials, again, they're still being beat up. No big deal though. They're being beat down. Visa, PayPal getting hammered. Wells Fargo down 2%. Bank of America down 1%. Morgan Stanley down 0.97%, pretty much flat. Goldman Sachs down 1.20%, but it's in our buy range. But however, we don't have to reevaluate our buy ranges, right? Especially with the news that we risk losing 20 to 50%. So now at this point, we can either stick with our entry price, or we can decide to just say, hey, the lowest thing I see, and that's what I'm going to invest in, right? And we continue to dollar cost average into these plays. So as they continue to come lower, and for me, my rule of thumb is every 5%, every 10%, 5 to 10% that it drops. Most times I wait 10% because I don't want to keep throwing money in there. But every 10% it drops, I add my next piece of the pie, right? So say for instance, Goldman Sachs, I want to invest $2,000. I divide that into 3 or 4 for $2,000, 4 seems like the right way, right? $500 four times. The first time I buy in $500. The second time it comes down 10%, another $500. If it comes down another 10%, $500. If I see it start to trend upwards, where it's going much greater than what I got it at, I'll buy it at the last, the highest price that I got it at the first time, right? And that is where I'll go from, because I want to make sure I invest the amount of money that I put into there. But you guys, make sure you figure out your own strategies. Make sure you have your own goals as far as what you want to do this year, right? Because I can't tell you what to do, but I can only tell you how I'm going to do this thing. Healthcare is down. Energy is down. I mean, pretty much everything is on sale, right? Everything is on sale, and based on the news, the negative catalyst that we're consistently getting, the Fed, the hedge fund managers, just pretty much everything, the odds are against us, right? Greatly against us. So we have to be very aware of what's going on, and we have to be watching these companies and knowing where we want to get in and where we want to get out at. How much are we willing to lose? Are we willing to hold? And those things like that. Because again, this guy says the stock market crash or the super bubble pop, quote unquote, has a risk of losing 20 to 50% of your money on any one company or any index, right? So we just had to be aware. You had to imagine that in a single stock. So whereas you invest in a company like VTI, right? I mean, you may not lose as heavy because you have somebody else managing that money. Where you invest in these single companies, the amount you lose could be limitless. I mean, you could lose 50 to 100%. However, VTI, because this is a big hedge fund manager, a big ETF, those people will manage your money for you. So maybe we should consider increasing this percentage to 80%. Invest more into VTI so that we know we decrease the risk of losing, right? So we start again. I told you guys, this is where I put all my children's money at. I don't invest my kids' money into single stocks or single companies. I invest into things like VTI and VOO because those are the companies that I know are going to be managed and they're going to be profitable over the years. And I want my kids to have the greatest chance of wealth so that everything goes well. All right, so now that we talked about that, let's get into the crypto heat map, right? Last thing, right? I'm not going to keep bothering y'all tonight. The Bitcoin is down 6.49%. It's down to 36,586. You guys gotta know, if I liked it at $47,000, I love it at 36, right? However, I want to wait till it comes down to the bottom. If it comes down into the 30,000, again, I'm gonna load the boat, right? I'm gonna buy as much of it as I can afford. Y'all know today was Friday, it's payday, so of course I'm putting in my piece of the pie. I'm adding money. And I of course I already bought this week. However, I still gonna add money because that's the type of consistency and dedication that I have. Luna's down 14%. Doge is down 4.56%. Shiba Inu down 12.56%. It's actually down to 4 zeros and 22 cents. I mean, man, this is definitely heavy and major, right? So maybe want to get into there while that price is low. Throw $50, $100 in there. Ethereum down $2,500. If it comes down any more, I'm definitely gonna be buying more. Y'all, I'm gonna continue to keep adding into crypto and the stock market, no matter how much it comes down. Because the way I see it is, I'm investing into my future. I am not deterred by the immediate losses, as I am looking forward to the future gains, right? Because it's all about the future, and I'm only using money that I'm willing to lose and money that I don't need right now. This is not the bill money. This is not the house money. This money does not determine whether I'm going to starve or eat on tomorrow. So Crypto.com is down 9.92%. Mana's down 10.66%. And Sand is down 9.19%. So again, in my opinion, these are all buy ranges, right? These are all buy ranges. If you haven't already established your position, these are good times to do so. However, again, wait until they start to trend back up. Wait till you see a couple days of good news, good trends, and maybe buy your position in. Or if you want to, like me, if you're not afraid of losing a little bit of money, and really you're not losing, it's a paper loss because it's definitely gonna come back in the future. If you're not afraid of those things, throw you some money in here. Be ready for the future. Be ready for the run up, just like I am. So that's all I got for you guys today. Again, y'all be aware of this. Y'all go check out this article just so you're aware of what's going on and what we're looking forward to. And I hope y'all have a good night. And I thank y'all for joining me on the journey to become wealthy. Y'all have any questions, comments, leave them in the comment section. And I'll see y'all tomorrow. Have a good night.